Hello everyone, and welcome to this morning's webinar for the Forex session. I was waiting for David to start and he was waiting for me to start. So between the two of us, we didn't know what the left hand was doing. So apologies for that. Right, hopefully you can all hear me. I just want to check audio. David, can you hear me okay? Brilliant. I think if David can hear me, I'm pretty certain that you can hear me as well. Brilliant. But before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, before we move over to the charts and see what has been happening overnight and what is happening at the moment, very quickly, for those, I know we have a lot of people who come for the first time, we will be looking at the charts through the prism of what we call volume price analysis. We will look at price action and volume and seeing how the two marry up or not, as it were. In other words, we're looking for anomalies, but VPA is much more than that. It is obviously price action and volume, but it's also support and resistance, candles, candle patterns, and time. And the support and resistance element of VPA is something that I particularly want to focus on my section of this webinar, because it follows a little message that I got on Twitter, actually, from someone who has read not the complete not the Forex version of VPA, but there is the original book, which is a complete guide to volume price analysis, but the principles are exactly the same. What we also have to look at is what's happening on the fundamental landscape. What news releases there are. There aren't very many today, but we always have to go and check. I use Forex Factory, and I also use a news feed called Financial Juice, which we have recommended to our students, and there's both a paid and a free version of that. The free version is very slightly delayed, but we also look at what's going on in related markets, because all the markets are connected. There's, there are relationships between the four capital markets, and there's also relationships within the individual markets themselves. But in Forex, there are certain currencies and currency pairs which will reflect what is going on in other markets. Primarily sentiment, and you only have to look at your charts this morning to see what has been happening overnight. It's very positive news. The market is in a good mood. How does that translate into Forex? Well, you would expect currencies, commodity currencies such as the Aussie and the New Zealand to be bought quite heavily, and that's what they've done. It doesn't always happen for all sorts of reasons. And following on from the book, what we've done is we've actually put together a complete program for Forex traders. This is just a breakdown of the content that is available in the program. As you can see, there are 5 individual modules and all the ancillary modules here underneath. It was a massive undertaking, but we are so glad that we have done it, because it is very successful. And successful, we get the pleasure that it has been successful, but much more important to us, it's been successful in the sense that the students, traders who have taken this program, it has transformed their trading and, more importantly, their success rate. They are now more confident, and not only that, but they are more consistent, because they understand what is it that's driving the market, why is the chart doing what it is doing. There's and as I said, it's got all the other elements that are mentioned in the books, relational analysis, the fundamental analysis. So as I said, we are David and I are hugely proud of our traders who have taken this program. Now, what we've also done, we kind of completed the circle with the program, which we launched just over 2 years ago, is now we give our traders, our students, the opportunity to have access to funds at no risk to them. Basically, it allows them It's just what we call the funded Forex program that we've put together. It's a number of accounts. They start at 5,000 and go all the way up to 2 million. You basically trade your way up to 2 million, but it's not, clearly it's not your money. It's just a one-off entry fee that is paid. That is it. There's nothing else that we ask of you. And as I said, there's you start at what we call the evaluation stage, and at the evaluation stage you have a choice of 3 different accounts. You can start at 5,000, or you can opt for 10, or you can opt for 15, and all sorts of requirements and rules around that. But if you want more information on it, you can find it at quantumtradingeducation.com. And we launched it last week. We've already got some people on the program, and you know, it'll be very interesting to see how they progress. And we really look forward to the day when we can, you know, we can look forward to our first $2 million trader. Right, what we've also done as part and parcel of the program and the funding program is we have also developed some very, very particular indicators to help us with to help us identify the flows that are going into not only the individual currencies but the currency pairs. In Forex, you are trading one economy, if you like, one currency against another. And what these indicators do, they, if you like, they disassemble the Forex market. So we start with a currency strength indicator, which is really a currency flow indicator. We want to know what's being bought at the moment, what has been bought. And because the Forex market, of all the markets, is I think, a true market of mean reversion, in the sense that currency pairs, or currencies and currency pairs, they move, they get to a point of either overbought or oversold, and then they reverse. And you get this constant oscillation. It's like a sine wave, much more so than all the other markets. For example, in stocks, there is a degree of mean reversion with stocks, but stocks have a bias to the long side. Because if you think about it, I know you can short stocks in various ways, either short the stock themselves or through the options market. But in reality, do you know of anybody who buys a stock because it's going to go down? No. They don't. Everybody buys stocks because they want them to go up. So it has an, if you like, an inbuilt bias to the upside. It doesn't mean the stocks don't fall and go to zero. Of course they do. But from the perspective of mean reversion, this market, it works beautifully in this way, and these indicators pick that mean reversion up, because as a trader, all traders, but possibly more so in the Forex market, you're really looking at reversals, as I said, from the mean back the other way, or you will be looking to join a trend. Now, because it's a 24-hour market, you know, you've got to know when to join perhaps a trend that's already underway, or do you wait for a reversal? Now, today is a fantastic example, because, as I said, overnight markets are in amazingly good mood. I think the Nikkei is up 2.5%. We've got the US 30 futures are based on the Dow. They're up to 225. The US 500 futures, that's based on the S&P, they're up 22. And even the NASDAQ, not storming ahead as it has been until recently, but that's up 59. The Dow is up. It's kind of is charging ahead at the moment, because there's a kind of rotation out of tech stocks, which you will find in the NASDAQ, into what are called more value and defensive stocks. But we'll talk about that a little bit more at this afternoon's session. But for us as Forex traders, we need to know, you know, what is the current market mood, because it's going to be reflected in the currencies. Then a quick look at what's happening on the fundamental side. Well, not an awful lot going on today if you look at Forex Factory, but this is why I suggest you look at Financial Juice. because it will offer you a much more comprehensive calendar. As I said, it has a free version. The calendar is available on the free version. And what do we have? What we have? Okay, forget the Hong Kong. That's if you're trading any of the exotics. What have we got? Yes, this one here at 2 o'clock. We've got Lagarde speaking. Now that doesn't appear on Forex Factory. That's actually quite important because it's just before Wall Street opens, but the Forex bit of Wall Street has already opened, and we've got consumer confidence at 3 o'clock as well. And we've got a couple of Fed. I think we've got a couple of Fed speakers as well. What have we got? We've got Bullard. No, just got Bullard speaking. Let's have a look. Just move it down a bit further, in case I've missed something. And of course this week, oh, here we are, yes, and so on and so on. And we've got another, I've got clear. I knew there was more than one Fed speaker. I hadn't moved the scroller bar lower. So you've got Bullard, Williams and Clarida. And what we explain in our program and what we said in these webinars is whenever any of the central bank members are come up on your calendar as commentating or speaking or participating in any discussion, the first thing you have to go and do is go and check who they are, and more importantly, particularly where all of them, but the Fed is concerned, check whether any of these have a vote on the committee. If they do have a vote, then the market will certainly pay very close attention to what they're saying, and markets will react more strongly if for some reason one of them goes off script. They don't tend to. They all tend to speak, sing from the same hymn sheet, as they say, as the cliche says. But when they, sometimes they do let things slip intentionally, inadvertently, Freudian slip, who knows? But you need to know who's who on the various committees and kind of get a feel for how much weight the market pays to their words. And we've got Elaine speaking as well at 5:45 this evening. And the reason, obviously, with the ECB, we've also, if you're a pound trader, British pound trader, we've got Brexit in the background. Now, what's happening here? And on my iPad version of Financial Juice, I don't seem to have it up at the moment, but Financial Juice have put up what they call a market risk summary, which is very useful. And they've got the Trump administration gives the green light for Biden transition. Then they've got German final GDP. And the other big news is that Biden is, I think it's pretty much certain, he's going to name Janet Yellen, to the Treasury, just Treasury Secretary. So the reason why markets are really happy is that piece of news, but also it's not that, Trump says he hasn't conceded, but there's an important committee in the White House, I think it's called the GSA. They are responsible for the transition from one administration to the other, and apparently they are beginning their work. So put all together, the market has taken that as a huge positive. The uncertainty of the election the election result seems to be receding. So everything is sort of hunky-dory, despite, so we've got the virus in the background, but it was Monday yesterday, so we definitely needed some vaccine news, which we got from AstraZeneca. So it's putting all these little bits and pieces together, and then you look at the indicators, you look at your charts and say, well, what is going on at the moment. Now, I was on cable yesterday, and I've looked at cable this morning, but it's going sideways at the moment, although I'm looking to see that possibly there is I'm looking for a bit of divergence on there. Because there is nothing going on cable at the moment for me, let's have a look. And I was going to look at pound yen, but I've chosen cable because it had some really nice lessons on support and resistance yesterday. And I've actually got some screenshots, which I will go through with you later in this session. But I just want to check on cable at the moment and what's happened. Let's have a look. Yes, it is. We've had the London Open. It's kind of sideways, looking to move higher, but it's a bit choppy. Let's have a look at my, yes, here we are. Sideways. Certainly not as strong. There have been better moves in other pairs. I mean, I think the pound New Zealand has had taking a bit of a swan dive. That's because that's been driven by the New Zealand. I mean, we can look at the daily chart and we can see there's a big sell-off in the afternoon, which is quite pertinent to what I was seeing on my charts yesterday, and I'll explain that in a little bit more detail. But we're certainly on a wanting to move higher. But as I said, if you're as a trader, you can either perhaps be like me and some of our other students, and we certainly recommend this when you're starting, is focus on a limited number of pairs. Really get to know them, get to know when they are likely to move, get to know their characteristics, what it is that's going to move them, and stick to them, and really kind of ignore the others, as it were. David, on the other hand, is completely different. He's, he just looks at the 28 and he just picks a target, if you like, and away he goes. That's his strength, if you like. That's his preference and his strength. Me, as I said, I prefer just to focus on, I think I've got about half a dozen that I kind of rotate through. It's a bit like if you're a day trader with stocks. There are thousands of stocks, and you could get completely lost in 5,000. So you put yourself together a kind of watch list or preferred stock. Some stocks move at certain times of the year. You've got in earnings, etc. There's all sorts of criteria, and it's pretty much the same with Forex. Unfortunately, we've only got 28 pairs that we need to look at. If you weren't here last week, what I've actually done, this is MT5, but I use it on MT4 as well. I've got this 5-chart profile combination for the pair, and it works really, really well. I've got the daily chart for overall context to tell me whether I'm in a trend or whether I'm in a consolidation. I've got the hourly, I've got the 10 or the 15-minute chart, and these are for my levels. These are for my Camarilla levels, because I've got different values on the hourly and I've got different values on the time frames below the hourly. Below the hourly, they are updated every 24 hours. The hourly ones are updated once a week, and it's quite interesting because I can see here it's actually gone through the R3, and where's it heading for? What these levels tell me is where this pair is looking to move to. I've then got a faster time frame. I've got the 5-minute chart here, and I've also got my Renko chart. The Renko chart gives me the structure of the price action. What am I facing at the moment on the faster time frames? And we can see here we've had this drift higher, but we've had an awful lot of sort of congestion with a bias to the upside. As I said, not necessarily an easy move to get into. So I'm going to pass over to David, because I know he has been looking at pairs that have been moving more strongly, as I said, and then we'll come back and we'll look at cable in a little bit more detail.
Indeed. Hello everyone, good to have you on board. Hopefully you can hear me okay. Just adjust my headset. Sorry, I was just fiddling around and I've just literally switched over to the futures workspace for literally just one reason, because we've had this big spike on big volatility candles. You can see this is on the 5-minute time horizon. So this is on the 6A, the 6B at the top. That's so that's Aussie dollar. This is cable. This is dollar. This is CAD dollar. The other way around, the 6C. So in other words, these are all pointing in the same direction, which is why I hopped over here. We've got the 6E, which is euro dollar. We've got dollar yen dollar here, and we've got New Zealand dollar. So they're all pointing the same way. In other words, the dollar is the inverse counter currency on all of these majors. And I just wanted to hop over and have a look at it because we've got this spike on volatility, which has come in literally across the piece. So what we're now expecting to see really in any of these. Doesn't matter which one we choose. Let's stay away from that one. Let's go start with the Aussie, because that's been bullish. It's been going sideways certainly since we got started an hour or so ago. It's been in a little bit of sideways congestion, but there you can see the volatility trigger. Massive amount of volume coming in. I mean, this is the giveaway, if you will, that the market makers are involved in that particular piece of price action. They've jacked it up very rapidly. What they're looking for is to pull you in on fear of missing out. So the market's moved very rapidly. And I've said many times before, what volatility is really nothing more than a compression of time. Because that move of, let's move the chat box out of the way, if I can. There we go. That move, which has gone from, where are we? 25 pips, 30 pips, something like that. In a normal day, the Aussie yen might only move, let's say 100 pips. Sometimes it moves 80 pips in a day. So a move of 30 pips in 5 minutes is extreme by any stretch of the imagination. And all that's happened is that price action has been compressed. That would normally take, let's say, I don't know, an hour maybe, that sort of phase of price action, and that's been compressed into 5 minutes. What happens thereafter is that you see that snap move, you want to jump in, you want to make some quick bucks because you see it fast moving. You've been sat here, you've been sitting here since 6 o'clock here, you know, we've been trading around, flip-flopping around, not really going anywhere, and then bang, up it goes, and you want to jump in. And it's absolutely the emotional trigger that you will sense. You can't help yourself, but you have to. And what we're waiting for now, if this is going to continue, you can be assured the market makers are in there, because look at the volume on it, absolutely guaranteed. This is not a trap move, they're in there, but they want to get you into an emotional state. Now we're starting to push higher. Be interesting to see what the volume is like under that one. Let's hop over onto the spot markets. There we go. And as you can see over on the CSI, this is on, I think this is on 5 minute. Yeah, this is on 5 minute. This is the Aussie, which is rising strongly. And that's the dollar. That's the dollar that was falling strongly. So great divergence. That's why you're seeing a strong move developing. We'll go and look at multiple CSIs in a moment. Let's just flick. This is on CAD yen, but let's change this over to Aussie dollar. Flick those over. Now we're on the Aussie dollar, moving strongly. We had let's just click those open. There we go. We had the volatility here. Let's go up to any one of these. Let's go to the 1 minute. Volatility trigger. This is the London Open. So it's 8 o'clock our time. We're now 8:10, so we're 10 minutes in. We've gone up to the volume point of control. The volume point of control may not have been there. It may have been at a lower level. Probably was, given that we had this very strong support and resistance region here on the accumulation distribution indicator. It was probably down here, but the reason it's here now, it's jumped up because we are now building into congestion. We're now starting to see that develop. What we're waiting for is a break away from this region for that move to continue higher. The trend monitor's transitioned into blue. Starting to see that transition over here. Just reload these. There we go. Oops, down onto the daily, go away. There we go. Reload that again. There we go. So where are we on the daily chart as far as the Aussie dollar is concerned? Just hop that up. And this is all very positive certainly for longer term trading, because if this candle is going to close this way today, maybe even wider, you can't say at the moment. I mean, it could end up like this. Who knows? If we get a reversal in sentiment later on in the session, it could well end up like that. But let's assume that it's going to close in this fashion with a nice widespread up candle with excellent volume underneath. We want to see good, strong volume under here. Then once we're up at this level, the interesting part of this particular phase of price action is we're now moving into this low volume area on the volume point of control. And what that tells us is that the effort required to move through that region, certainly from a volume perspective, is going to be far less than if, for example, we were trying to break through much higher volume as we've got down here. And that is the beauty of the volume point of control histogram and what it reveals to you as a trader. Now this is the daily, but this could be a 1 minute, could be a 5 minute, could be anything. Once you start to move up into these low volume areas, the expectation for the future price action is that it's going to move through there fairly easily, because volume is not going to present a barrier in the same way, in exactly the same way as you look at support and resistance through the prism of price-based support and resistance. You look at volume in exactly the same way. You look at it through the prism of support and resistance. Have I got a large wedge of volume in the way, or am I coming up to some sort of low volume area? It's so important using it in that way. The volume point of control itself gives you the view on where the fulcrum of the market is when the price action is oscillating, or indeed also when it's approaching a volume point of control in a different time frame. Don't know where it is on the 5 minute. Let's go and have a look. Okay, we've broken away from that one as well. Now, at some point when you're trading across multiple time frames, the price action will move towards the volume point of control. And again, it's so powerful because what it will reveal to you is that expect the market to congest at that level. Do not expect the market to go through there blindly, ignoring the volume point of control, for two reasons. Firstly, because it is the VPOC and there has been an important level in the past. That's point number one. And point number two is there is a huge amount of volume sitting there by virtue of the fact it is the volume point of control itself. So when you're looking at it on slower time frames, even if you're a scalping trader, if you see the price action coming up to the volume point of control on a slower time frame, that will carry more weight, far more weight than the chart you're on if it's a slower time frame, purely by virtue of the fact that it is a slower time frame, and therefore by virtue of that fact, it carries more weight. It has to, everything in trading, the slower the time frame, the greater the weight it carries. Let's go down onto the 15-second. See where we are. We had the volatility trigger. We then had a ton of volume coming in, pretty weak. Market's trying to rally. Now we're trying to see if this is going to continue. But what the trend monitor is saying, the trend monitor is still holding us in. We're trying to break away from the volume point of control. Volume is dropping away here. It's a little bit sluggish at the moment, but you see the trend monitor, how it's transitioned across the time frames. So it's blue here. It's blue on 1 minute. It's transitioned through from bearish into a darker red. Didn't go darker blue on that phase, but went straight out the other side into bright blue, largely because we had this snap move onto our volatility. Blue down here, remaining blue down here, and obviously remaining blue on daily. So the broad sentiment at the moment is very positive. Just have a look and see what's going on in terms of the US indices. There we go. This is the three majors, if you like. This is the YM, that's the Dow 30. This is the NQ, that's the NASDAQ. And sorry, I don't know why that's reverted to the DXCM. I was looking at that last night. Just changed that over to the ES. There we go. That's now on the ES. Okay, and we've got the S&P 500, and they are all on 5 minutes. And then down at the bottom here, just change that back to daily. There we go. Let's reload that. There we go. So that's, and down at the bottom here, as I say, we've got the daily. There we go. Okay, so we're now back on track. From a daily perspective, we're still trading inside the band of this volatility trigger, all driven by vaccine news and the pandemic, but we're still trading within that particular slice. Elsewhere, it's very sideways at the moment. The market is trying to remain bullish, but it's very much congested. And what we're seeing up here on 5 is, yes, there is bullish sentiment, but it's very much contained around the volume point of control here on all 3, which you can see is very much in evidence. And hence the reason that at the moment, this is Globex, by the way, we're running electronic. The cash markets are not open, so we're only running one market here. But it's a question of waiting for, certainly in terms of sentiment at any rate, for this particular move to develop further. But for the time being, it's very congested, it's very contained, and that's why when we go back onto the spot markets, certainly in terms of the yen complex at any rate, there we go, just pop that out of the way. You know, the buying of the risk currencies, it's not following through very strongly. You can see here, this is on the dollar, I appreciate that. I'll just flick this over onto the yen in a moment. What are we seeing here in terms of volume? We've got a market that's trying to rally, yeah, it's trying to go higher, but the volume is actually falling away. So we've got a rising market on falling volume. It'd be interesting to see if that follows through. But there's certainly weakness here. There's weakness in this one as well. So there is buying, but it's being capped at the moment. Let's go over onto one. Here we are. And again, the similar sort of principle, big surge in volume, volume's falling away. The encouraging aspect, if you're looking to hold this position on the pretext of a further move higher, is that the volume here is falling away. So we've got a reversal here, little reversal here, but the volume is falling. So what that's telling you is that the selling pressure on this particular time frame is diminishing. In other words, if this were heavy selling coming back into the market, the volume here should be rising. It isn't, it's falling, so it's falling away. But then equally so is the up volume. So it's very fragile at the moment. It's not a particularly strong move, but it's certainly enough to stay in there for the time being. And what's holding you in there, amongst other things, is obviously the trend monitor, which is remaining blue throughout that top line, and has also reverted down here. Now, if we go and head over and have a look at the multiple CSIs, where are we? There we go. That's it. See what's going on here. This is the Aussie. That's the buying of the Aussie. So we're seeing the Aussie move up. This is on 1 minute, 5 minute, 10 minute, 15 minute, exactly the same way. As you use multiple charts, use the currency strength indicator in multiple timeframes. It's absolutely essential. So it's moving up very strongly overbought, climbing here into overbought, continuing higher, into overbought on the 10 minute, into overbought on the 15 minute. To the downside, equally, you can see the strength of that move. You've got the dollar here, which is falling sharply, the red line, falling sharply on 5, falling sharply on 10, falling sharply on 15, which is fine. The issue on an intraday basis now is these are very strongly overbought. The Aussie is very strongly overbought and the dollar is equally strongly oversold. And therefore, for a continuation of that trend, one has to be cautious because these are now at extremes. And if I was looking at this chart right now, what I would be looking at as a reversal trader, out and out reversal trader, would be to take a position, a counter position. In other words, looking for a short now. And what I'm looking for is this to flatten off, which it is on 1. I'm looking for a flattening off on 5, a flattening off rolling into 10, and then over onto 15. And the same thing with the dollar at the bottom. Once it starts to flatten, same here, rolls over into 5 and starts to flatten. And by that time, I'm certainly setting up for a reversal, looking for the opportunity to short that particular currency pair on the expectation of the dollar then rising and the Aussie then falling. The other thing about the currency strength indicator, obviously, I always look at extremes. What you're looking for constantly is either extremes. We're looking for many things. You're looking at the extremes, overbought and oversold. You're looking at the inclination, the angle of climb or the angle of fall of the line, which will tell you about the strength of that particular selling or buying in the currency. You're then looking to match those up. But what you're also looking at is currency pairs that are of no interest right now. There's a lot of bunching going on. What you also look at is whether currencies are moving in the same direction. Down here, we've got this is the Canadian, we've got the Swiss, we've got the dollar. So any of those related pairs with the yen, the CAD, the Swiss franc and the US dollar, they're all moving in the same direction. So there is no divergence. In other words, there'll be congestion. So what we're looking for constantly is we're looking for divergence. We're also always looking for one that's climbing and one that's declining, and climbing and declining strongly in both directions, because then you've got the power of that revealed in the momentum. So let's hop back onto the charts on the Aussie dollar. It's still climbing, but it's not climbing with huge strength right now, but it's still remaining positive. You can see it here. This is on 5. That's the 5 minute. Yeah, that's the 5 minute. So the Aussie here is still climbing, but it's very heavily overbought. The dollar equally is very heavily oversold. So there's still some momentum left there, because if you went out to 15 minute or 30 minute on the CSI, there would be some travel left. And this is what you have to tease apart, is what am I trying to do? What time frame am I trying to do this in? How long am I going to hold this position? It's all about focusing on your time window. Imagine it as a 3-lane highway, 3-lane motorway, and the trading terminal, the trading window you're sitting in is the middle lane, and you have faster moving traffic on one side and slower moving traffic on the other. And it's really exactly the same principle, and it's trying to limit yourself to that particular vision of the market, if you will. Let's go over to currency arrays. Where are we? Oh, can't see it, must be blind. Where's my currency arrays gone? How strange. Workspace disappeared. Sorry about that. Let's go and have a look at the currency matrix. How weird. You can see it here, this is the backdrop of the Aussie dollar, so you can literally see what's going on the chart at the same time. That's why it's up here at spot 1 at the moment. If I just isolate out on the dollar, there we go. Because what we want to see is whether that buying or selling of the Aussie, and obviously the inverse of that, the selling of the dollar, is universal across the piece. So what we want to see in terms of the Aussie, if I isolate out these, let's go up to the 5-minute. This is what we want to see. We want to see the fact that if we're trading the Aussie dollar, the sentiment towards the Aussie right now is universal. In other words, everybody, bar none, is buying the Aussie. And that's reflected in the fact down here, the pound Aussie and the euro Aussie are down here also. So, you know, this is all very, very positive stuff for us trading the Aussie. We're not trading in the counter direction of everybody else. In other words, we are trading with the flow of the market. This is on dollar CAD. You can see the plunge in the dollar here. Very heavy selling of the dollar right now. If you're in the Aussie dollar, it's great news. That's what's helping to drive it higher. That's what the currency matrix is telling you. What we want to see, bear in mind, this is 1 minute. We want to see these joining their brothers and sisters at the top. We want to see the pound Aussie go down here some more. So it's really moving nicely. This one to join this one. Let's have a look on 10-minute. Isolate out on 10, pretty much a full house there as well, really nice. Up onto 15, yep, absolute full house there. You know, this is, and when I say full house, I mean you've got the 4 of these at the top and the 2 of these at the bottom. So there's absolutely no question. It's an unequivocal, clearly defined for you that everybody in the market right now is buying Aussie, and they're buying Aussie strongly, but at the same time they're also selling the dollar quite strongly too, as you can see over here on the dollar CAD. So it's a really nice trade, developing some strength now, developing momentum, keeping you in there. We can see a little bit of a drop off here in the CAD New Zealand. You probably see that reflected over if you hopped over onto the CSI right now. This is just starting to lift off the bottom here. It doesn't mean that this is going to move all the way across this time horizon, but it just gives you a heads up that there is a slight pause coming into the market because these two have lifted. This is starting to break up a little bit. If it's going to re-engage and be nothing more than a pause point, a minor pullback, for example, then what will happen is these will start to shuffle up, these will shuffle down, but then they'll shuffle back up again. And you won't see much of a change on 5 unless this is going to be a true blown reversal, in which case you will start to see that effect breaking these up. These will start to lift off the bottom, and ultimately that will go through to the 10 and out to the 15. And you can see why it's happening to some extent, because if you look down here at the dollar CAD, you can see there's some buying of the dollar coming in now, whereas that candle was widened down a minute or 2 ago. It's now starting to develop a wick. Bear in mind, this is a 15-minute candle, so you know it's got some way to go. But you can see the buying that's starting to come in on the dollar, and that's what's causing this sort of change now, which we're seeing over here on the 1-minute chart for the Aussie dollar. But that's the way to use the currency matrix. Again, it's using it in multiple time frames. We keep banging on about it here, but you know that is the core principle, not just for the charts, but also for the indicators themselves. Here we are. Now we're back on the time frames again. You can see that beginning to develop. This is on 15-second, bear in mind. This is on 1 minute. This is on 3 minute. This is on 5 minute. This is on 10 minute. And this is over to the daily. And what we'd be looking for potentially is, and you can see it here now, if you look at this particular candle, we've got a widespread. Right, can anyone hear me now?
Yes, I can
Anna can hear me. Yes, thanks, Alan. It's the first time it's ever happened. I can only describe it to you. I was in full flow. Clearly, you lost my sound. Anna could not hear me either. You couldn't hear her. We then looked on GoToWebinar, and it said start the broadcast, which is bizarre. It's almost as if the broadcast hadn't started. So we restarted it. Absolutely no idea. Apologies. Take a deep breath. Right, move that out of the way. Here we go. Right. Where were we? Back on the Aussie dollar. Let's just pull that over a bit. There we are. Hopefully you heard up to, we were looking at the currency matrix, which I think was okay. There we go. And yes, there we are. You can see this is all now broken up. This is still fine, but obviously you wouldn't expect it to have any major change, but you will start to see a breakup of this coming now. You can see it occurring now on the 1 minute. And if we revert that back to Aussie and change over to dollar, let's see what's going on in terms of dollar. And what we're looking for is we're seeing some buying coming in here of the dollar. So if we hop over onto the multiple CSIs, currency strength multiples, there we go. Okay, let's hope everything's going to load back up again. Yep. This is the buying. This is, bear in mind, again, this is 1 minute, it's very quick. This is the sort of buying that we're now starting to see reflected on that dollar CAD chart on 15, but that's what we were starting to see. And again, it demonstrates to you, you have to be very focused on the time frame you're trying to trade, because this is snapped up on the 1 minute, but yet on the 5 minute, not a great deal of change yet, not a great deal of change on 10, not a great deal of change on 15. And you know, that's the key. It is focusing on whatever it is you're trying to do on that particular time frame. Let's just go, let's have a quick look at the majors. Right, this is on spot majors. There we go. So we've come off the, not on the futures, this is on the majors themselves. So this gives you a straight heads up view on what is going on in terms of the dollar. This is cable, this is dollar CAD. So you expect to see the inverse there. We've got the Aussie dollar here, which we've been looking at. Let's reload that. Euro dollar, dollar Swiss, and New Zealand dollar. And the nice thing about using a matrix like this, and you can make them up in any form you like. You can have a yen matrix, dollar matrix, Aussie matrix, whatever. It will always give you, apart from those where the counter currency is always in the same on the same side, as in the yen, for example, it will give you this inverse perspective of price action and the associated volume, which is really handy, because what you then see is if you're trading, let's say you're trading a cable to the upside, and yet with the dollar and the dollar CAD and the dollar Swiss, you will see the inverse of what is going on. And it's so important, because what you're seeing here is you've got a volatility trigger on dollar CAD. Now, it doesn't automatically relate directly to the pair that you might be trading, but it does give you a heads up as to the possibility of congestion in your particular dollar pair, or even a full-blown reversal. We haven't got any volatility triggers down here on the dollar Swiss, and we haven't got anywhere elsewhere. But it just gives you that, and when you look at the volume on there, let's just pop that up full size. Lots of volume under that particular candle, nice volatility trigger. What are you expecting from the volatility trigger? Two things, either a full-blown reversal or at the very least a congestion phase to develop thereafter. So again, it's so important to use not only multiple time frames, to look at the pairs across a matrix, to see what's going on in terms of the currency matrix indicator. The currency array I haven't got up because I've lost the workspace for some bizarre reason. But it's always about trying to pull together the various fragments of the market information, whether it's sentiment. You know, I've got, let's have a look, I've got the VIX running over here, I won't pull it over. You're looking constantly, if you haven't got the VIX, I've got it on TradingView, I haven't got investing.com up there at the moment, but you can find all this information on investing.com. It's a fantastic site, and there you will find the VIX. You'll find a chart of the VIX as well, amongst many other things. So now what we're looking at is certainly from the perspective of a reversal position. I'm looking at this, I'm looking at the volume falling away, I'm looking at weakness coming in, I'm looking at the overbought, oversold state of both those particular currencies, and I'm looking at the opportunity to short that particular pair and take on a reversal opportunity. The payoff is much greater because you're getting in at the start of that particular trend development. If this goes all the way back down to the VPOC, you've got all this to recapture. The downside of reversal trading is twofold. First of all, you have to be patient and wait. So if you're not a particularly patient trader, then this tactic probably won't suit you. But I'm a fisherman and I'm very patient. I'm happy to sit there for long periods and wait for the fish to come along. It's exactly the same principle here. Secondly, you will have to set a much wider stop loss. You cannot expect to reverse trade this by looking at this and go, well, this is 60 to 65, so there's 5 pips, so I'll put a 5 pip stop loss in. You'll get taken out, and you'll get taken out in any pullback reversal higher before it does actually move. So you have to lay out more risk on the table. But then in laying more risk on the table, you are going to benefit from a much bigger potential profit, because you've got in early to the trend. If you're a trend trader and you're jumping on these trends as they're underway, then you have given up. If this goes all the way back down here, you might be jumping in around here somewhere. You've given up all this 20 pips, whatever it is, 25 pips. That's already history. You can't recapture that. You're just taking a little bit out of the middle here. That's the nature of trading. You put more risk on the table, you should expect a higher reward. You put less risk on, expect a lower reward. But I say, reversal trading, it doesn't suit everyone. It's a tactic that I love, I favor it, I have to be honest. I'm always looking out for it. But then I'm prepared to be patient, and I'm prepared to put more risk on the table as well. If it doesn't work out, fine. Doesn't work out, takes you out of the market. You've lost your stock, you've lost some money, get on to the next one. Simple as that. And just to go back onto what I was saying earlier on about the volume point of control, and the power of that is not only will it tell you where this market could go back to, which is very much down to this sort of level where you would expect congestion, what it also reveals to you with this great gap here, because the market shot through there very quickly, when the market comes back down here, you would expect it to move through there with equal speed. So as a short position, once you get down to 45, then as the price action moves into this region, because it's a low volume area, you would expect that to move through there very rapidly indeed, because there's nothing to cause the market to congest at that point. It's free space, if you will. There's no price-based potential support coming in there, and there's no volume-based support coming into play there either. And that's why when you get down to volume point of control, you expect congestion. You've got the volume point of control, you've got this very strong platform of support here, you've got another one below it, so you've got 3 reasons there to expect congestion, in addition to which you've got this 1.5 tons of volume sitting there. So the market is going to sit there irrespective of what else is going on.
It's actually a good time to just pop back over now that everything's sort of settled down. I was talking at the beginning, I said the comment that I'd had on Twitter about chapter 7 on the complete guide to excuse me, volume price analysis. He basically said that it was the first time that he'd looked at support and resistance it made sense to him, basically. And for those of you who haven't read that chapter in that book and haven't got the book, it talks about support and resistance in the terms of floors and ceilings, and also using using a pivot. And this is the pivot indicator that we've developed. I'm not going to go through the chapter itself, but there's a really nice example here on the 15-minute chart for cable. And essentially what you're looking for in support and resistance is you are looking for, as I said, these creation of these floors and ceilings. And given that price action, that's a really nice trend lower, as we can see here, and a lovely waterfall. And then you do actually have a very nice reversal on a 2-bar reversal. It's like a V-shaped reversal. It drifts higher, and then gradually it begins to move into what we call this congestion phase, where the pivots, if you like, start to denote the areas of the ceiling and also of the floor. Now I'm just going to talk about this one here in particular. This is the congestion. It also is where Wyckoff's second law comes in, because it's the law of cause and effect, because the longer a market is in one of these phases, in a very, if you like, at a tight range, a narrow range, defined by as I said, the resistance at the top and the support at the bottom. When it does break out, it will break out in a very strong and sometimes very explosive way. And the longer it stays in this type of price action, particularly on the slower time frame charts, you know that any move, whether it's to the upside or downside, is probably it's got a bit of energy behind it, because all this in this piece of price action, you're storing up energy, if you like, and then that is released on the breakout. But to get back to the support and resistance, now here, what is also helping me is our Camarilla indicator, which is telling me loud and clear that this congestion phase here, where we have the pivots. I've also got fractals as well, very clearly marked what is the resistance and what is the support. But there's also another bit in that chapter about support and resistance, is that you can draw lines. You could have, I've got the Camarilla levels here to draw the lines, but you still have to be a little bit flexible. These markets, the price action is dynamic. It's a living thing, if you like. It represents the emotions of millions and millions of traders behind it, as it were. It's so while we have a ceiling here, it will sometimes pop through and then come back again. What's interesting is when you get one of these phases on a price chart, is on this occasion the support platform is really strong, because it really hasn't been pierced very much. As we can see here, it's kind of held all the way, and then gradually, as you can see here, it starts to if you like, you get higher lows and higher highs. So you begin to look at the candle patterns, the shape of the price action. With the resistance side, we can see it's had an attempt to break through, then it went back into the congestion. But you look at these phases of price action here. Sometimes they can last a long time, and they can also be extremely frustrating. Frustrating here because you've got a lot of you've got that candle would have been up here, but then it fell back. You've got a lot of volume underneath there, and that tells you that's not going to go very far, because you've got weakness coming in here. You've got a reasonable amount of volume under there, and you think at each, if we ignore what's happening here, if you imagine this as it is developing, we know it's in a congestion because, as I said, I've got the added benefit of having the Camarilla, which is also helping me define this region. But if you didn't, you would have to rely on the shape of the candles, the shape of the congestion phase. You've really got to get yourself something like a pivot, or you actually draw a line yourself. And once you get sort of 1, 2, 3, you put your line across it, and that tells you, what is the current high in this particular phase of price action. So I just wanted to show you that, because it kind of really explains that comment that was given to me, and also is an illustration of what is on chapter 7. Now, when we looked at cable, what did I say? I said I looked at the hourly chart, and it was going to break, and it was going to pause at the R4, which is exactly what it has done. Again, the importance of having key support and resistance levels on multiple time frames. So it's paused at the R4, and explains this little pullback that we've seen at the moment. There's a lot of volatility around at the moment, not surprisingly because of Brexit. We had a sort of retrace into the candle, an attempt to move higher, but it stopped, and there's a lot of volume under there, and you think, well, why has that stopped? Well, this is why you have to go to another time frame. You have to look at a higher time frame, and you can see here it's sort of, that's what's causing this price to pause and pull back. On the daily chart, we are still actually in an uptrend. I know we had a pullback yesterday, and if you look longer term, you have to look to the left of the chart. If we pull this back a bit, where are we? Well, we're reaching a key level up here. This is 34 in the 3480 region, and you know, even going up to something like the weekly, is cable coming to perhaps a major top? Who knows? With Brexit, constantly in the background. And what do we have here? Well, we can see on the weekly, it's beginning to approach areas on the chart where it has actually reversed. From an intraday perspective, you can say, well, what is the significance? The significance is that you could see a really nice setup on a faster time frame, but because it's now reaching one of this key level, it could be that it is going to struggle. If you were looking at going long sort of down here somewhere, you would have had plenty of, there's plenty of room to the upside before it reached this. As I said, this really looks like an important level for cable. And as I said, and then you put that into the context of what is happening in the background, and of course we have the background of Brexit. Is it going to be a deal? Is it going to be an interim deal? Is it going to be postponed? Is it going to be a no deal? Who knows? But getting back to the kind of time frames that most traders trade, we know why we've got the pause. We've got the pause on the 5-minute chart as well. We're basically going sideways. What is the Renko saying? And the Renko picks it up again. What's interesting about the Renko, because it takes away the wicks to the candles, and you've got more, you can see the structure of the price action much more clearly and in a much more geometric way. What is interesting is we have had the pivots, we've had the pullbacks, but if you notice, if you were to draw a line across there, you are in a kind of congestion, but as I said earlier, it has an upward bias. So, there were a number of, possible points in this move where you could either enter or rejoin the move. Now, is this going to go higher? Yesterday with cable, it paused. Just as New York was opening, it looked like it was going to reverse. Then it actually popped higher. In fact, if I pull up the hourly chart, what have I got here? Let's have a look. This is what it looked like. This was the hourly chart for cable yesterday, and this was quite interesting. It went straight up to the R4 on a volatility candle. Looked like it was going to reverse, but actually, if we compare it with actually happened on the hourly yesterday, this is the preset price action that I captured on my screenshot, as we can see here, up to the R4. It looked like I must say, it looked like setting up for a reversal. The CSI also, the pound was very overextended on the CSI, but it dipped and went on higher, and it did actually. By the time, this is the open, this is the US open, and then we had this move, sharp move lower, which actually corresponds to that wick that we can see here on the daily candle. Right, to return today and to return to this upside move for cable potential, what are we looking for? Well, clearly it's got to clear this level here, which is, we know the R4 on the hour. Where do we think it's heading? Well, look over to the left. Where is the high over here? What is it? 133.89, 133. Let's round it up to the nearest 0 or 5, because that is where I bet I haven't looked at the order flow because I haven't got TradeStation up at the moment, but I would guarantee I put money on it that wherever there's a 0, wherever there's a 5, you are likely to find institutional orders waiting to be triggered or not. We are going to be doing quite a lot about order flow once TradeStation is launched. The thing about order flow and about institutional levels is this: they are interesting in the sense that institutions may be looking to buy and sell at these particular levels, but you have to remember there's an awful lot of trickery and spoofing going on. Just because it hits that level 30, maybe is it 33.90, it could be a bunch of orders waiting on a sell. Is it necessarily going to happen? Some of them are pulled at the last minute. It's not allowed, but it happens. But 0s and 5s, be aware of them. They're always going to attract this interest, if you like, because institutional traders, they're lazy. When they quote, when they're giving a quote, they use a 5 and a 0 because it's easy and straightforward. So if this is going to go higher, it's got to break through here. Support, price-based support based on the Camarilla, or it can reverse. And where will it reverse down to? Well, you look down the other direction on the faster time frames. Well, it's certainly, you've now got the volatility candle here on the 15-minute chart of itself gives you support and key important support and resistance levels. But that little explosive move occurred from this congestion, and as I said, it was more of a drift higher out of congestion. It wasn't sort of an explosive move. The explosive move came here off the R3. Right, what is the CSI showing? CSI is actually showing the pound rolling over slightly. Let's have a look on multiple CSIs. Let's have a look, see what's happening. Well, on the hour, it's still showing that it wants to move higher. The dollar is still moving lower. What have we here? This is on the 30. Where are we here? This is on the, as I said, on the faster time frames. And this is what you have to also, I'm going to do a little screenshot actually, because I talked about mean reversion oscillations, and it's easier to see it on a graphic where basically you, on one time frame, on a slower time frame, you have a price sort of moving up like this on a big, I'm going to draw it like that, and on a faster one underneath it, it'll be doing that. That's it. So at some point the cycles will coincide. Let's call them price cycles. They will coincide, and at other points they will diverge. Now, as a trader, depends on your time frame. Are you on the one that is looping like that on the slower time frame? In which case you will ignore all the little oscillations on the faster time frame, or you could, if you're a scalping trader, you'd be aware that the price on the slower time frame is looping up and down like this, and you will be looking to take the oscillations on the very fast time frame. You don't really care as long as you can catch the ones going down and up and down, up and down. It really just depends on your style of trading. Right, I'm going to pass back to David. I'm going to say goodbye, and we will be back later on this afternoon. I hope you've enjoyed what we have covered this morning. We will be back next Tuesday, David? Yes? Yep. Or this afternoon, when we'll be looking at the US markets in more detail.
Hopefully you can see my screen and also hear me. Anna's just going to check. There we go. Very quickly, just to wrap up, because we've gone way over time. This is what the sentiment, if you like, the US indices are doing at the moment. Flip-flopping around. The NQ is looking a bit fragile. YM's trying to rally. ES is trying to rally. So it's a little bit mixed, but you can see we're trading around the volume point of control here. It's not rampaging higher, but then equally, nor is it rampaging lower at the moment. And hence the reason that let's just have a final check on where we are with the Aussie dollar. There we go. And this is why you have to be patient reversal trading, because we've got a washing line going on here. flip-flopping around here, flip-flopping around here, you know, very much contained here, moved into weakness here. We've just got to wait and be patient. We've just got to wait for this dollar to start to lift and the Aussie start to fall. You're seeing very, very minor effort to do that at the moment. But again, as I say, you've got to be patient. You've got to set much, much wider stop losses to reversal trade. Very quickly, just to point you in the direction of everything, quantum trading education, that's where you will find both the education program, but also the funded Forex program. And as Anna said, you start with an evaluation level of 5,000, 10,000 or 15,000. It's your choice. You decide where you want to start. The only difference is that your starting level will add, I think it's another level before you can get to the 2 million. So it's slightly, you have slightly more levels to get through the lower you start. Once you've passed through the evaluation stage, as I say, it's $5,000, $10,000 or $15,000. Then we multiply those by 4. So you then go up to $20,000, $40,000 or $60,000 in your funded account. And the structure of the program is very, very simple. At each level, you have a dollar-based target to achieve. Once you've achieved that target, you move on to the next phase, and so on and so forth. The only level that has a time element attached to it is the first level, the evaluation stage. We give you 12 months to evaluate. You're evaluating us, we are evaluating you. You're looking for consistency. Once you've found that, then you know the world is your oyster, because then it's just a question of trading larger sums, which is really what this program is about. If you have the consistency on a 5, 10 or 15K account, you've cracked it, because then all you do is just replicate that with ever larger sums of money. And that's the whole essence of the program. And the reason we've put it in place is to give you, as a student of the education program, the opportunity to leverage your knowledge. It's as simple as that. It is only open to students on the program. Sorry about that. You won't find it elsewhere. You'll find details of it here, but you will not find all the details in to a great extent, nor indeed the buy buttons. You have to be a student on the education program. We decided that ahead of it because that's the way we want to keep it. So if you're interested in joining the program, fantastic. If you're an existing customer of quantum trading software and you have some indicators you've already purchased, we give you a full credit for those against upgrading to the education program. So you don't have to buy anything again, because the education program includes the full set of indicators. So if you've got one or two, or maybe you've got a bundle of something or the other, email the help desk at Quantum Trading Software. They will confirm what credit you can have, and then you're perfectly welcome. You're more than welcome to upgrade to the education program per se. And as I say, you get a credit for whatever it is you spent with quantum trading software. That's the program. It is comprehensive in the extreme. There's 450 odd lessons in there. There's 250 odd hours of video in there. It covers everything you need to know to give you the confidence to trade Forex with complete confidence. This is Anna's site, annacooling.com. You'll find all the analysis there. All the books are up on Amazon, both in Kindle and paperback. And finally, the software you'll find over at quantumtrading.com, MT45, NinjaTrader 7.8, and TradingView. TradeStation is coming, I assure you. Been a long haul, but we're doing two platforms at once, essentially, because we're doing 9.5, which is TradeStation and Interactive Brokers, and TradeStation 10, which is the conventional TradeStation securities platform. So we're launching two platforms simultaneously. And that will be done ASAP. There've been a lot of things we've sorted out, but we are pretty much there or thereabouts. Then we're going back onto TradingView, which is very exciting because we're going to port across all the indicators that are missing there. So if you have the full package of TradingView, you will get those issued free of charge, no question. Then we will uplift the price on TradingView to align with the MT45 at $894. So it's a great time to invest in TradingView because you're saving 200 and something odd dollars. You're getting the currency matrix, the currency array, the currency heat map. They will be included in the full package for TradingView. As I say, as soon as they are launched, we will uplift the price to $894. So if you buy now, great time to buy. We're going to run. We've got to take Bertie for a walk. And then we're going to have a second cup of coffee. Enjoy the rest of the trading day. We will see you later in the US session at 3 o'clock UK time. If not, enjoy the rest of the trading day and the trading week, and we will see you back here next week. So thanks for joining. Thanks for coming along today. Hope you've enjoyed it. See you soon, and bye for now.